In this video, we're going to go over your Chapter 11 homework, problem number 4, which relates to the incremental operating cash flows. So in this problem, Richard and Linda Thompson operate a local lawn maintenance service for commercial and residential property. They have been using a John Deere riding mower for the past several years and believe that it is time to buy a new one. They would like to know the operating cash flows associated with the replacement of the old riding mower. The following data are available. There are 5 years of remaining useful life on the old mower. The old mower has a 0 book value. The new mower is expected to last 5 years. The Thompsons will follow a 5-year maker's recovery period for the new mower. Depreciable value of the new mower is $1,900. They are subject to a 40% tax rate. The new mower is expected to be more fuel efficient, maneuverable, and durable than the previous models and can result in reduced operating expenses of $514 per year. The Thompsons will buy a maintenance contract that calls for annual payments of $121. And we're supposed to create an operating cash flow statement for the replacement of Richard and Linda's John Deere riding mower. Show the operating cash flow for the next 6 years. So if you remember, we talked about the operating cash flows. And we're going to do this for 6 years. So, in fact, if you take a look down below, they give you the formula that I talked about in class. The first thing that we're going to do is we're going to look at the cash revenues associated with the machine. In this case, it's the reduced operating expenses of $514. After the cash savings, we have our additional cash expenses. Then we subtract depreciation on the new machine because the old machine is fully depreciated. And when we take our cash savings, subtract our additional expenses, subtract our depreciation, we come down to our operating income. From our operating income, we want to calculate our tax expense. If we take our operating income and subtract our tax expense, we have our after-tax income. If we add back the depreciation expense, then we wind up with our incremental operating cash flows. All right, and the only thing we're really going to have to do with this is calculate the depreciation on the new machine. So, the new mower is expected to be more fuel efficient. So each year we're going to have cash savings of $514 a year. We're going to have our additional cash expenses of $121 a year. Both of those are given in the problem. And now all we're going to have to do is calculate the depreciation. So I'll have the rate, and we'll have the amount, and our cost of the machine was $1,900. So when we bring up our table, using a 5-year life, our rate in year 1 is 20%. Our rate in year 2 is 32%. Then we have a 19% in year 3. Then we have 2 12s and a 5. So my cost is $1,900. My first year depreciation is going to be 20% of the $1,900. I'm going to use the F4 in the 1900, so I'll multiply each one of those percentages by the 1900. So 20%, 32%, 19%, 12%, 12%, and 5%. So now what we're going to do is we're going to subtract our depreciation. So I'm just going to make a link to the amount. So we're just going to subtract the amount of the depreciation. And now each year we can calculate the operating income. And I can use sum because I have a positive number for the cash savings and a negative number for the additional expenses. So we want to take 514, subtract 121, and subtract $380. So the first year I come down to a whole $13. Second year there's actually a loss. Then we have 32, 165, 165, and 298 for our cash flows. The problem says that they're subject to a 40% tax rate. So our tax expense is going to be whatever the operating income is multiplied by 40%. Now, to calculate our after-tax income, we're going to take our operating income and we're going to subtract the tax expense. So notice with year 2, we're actually going to take a negative 215 and we're going to add 86 because we're going to get a tax benefit. So I'm going to take the operating income, I'm going to subtract the tax expense. So 13 minus 5.2 is 7.8. Now a negative 215 plus 86 is a negative 129. The rest of them make sense. We're just going to take the operating income, subtract the tax expense to come down to the after-tax income. Now all we have to do is add back the depreciation expense. So all I'm going to do is make a reference to the same depreciation that we calculated. And now all we have to do is add the after-tax income to the depreciation to get our operating cash flows each year. So now that we have the 6 years, let's put in the information. So year 1, our savings from the improved mower is $514. Our annual maintenance cost is $121. I'll put that in as a negative number. The depreciation is negative $380. So the savings loss before taxes is $13. We're supposed to round to the nearest dollar. So our taxes are just going to be $5. Our after-tax income is $8. So adding back our depreciation of $380, our incremental operating cash flow, $388. Now let's move on to year 2, where it's going to be very similar, just basically a different amount of depreciation. So we have our $514 for year 2. Negative 121, negative 608. So our savings loss before taxes is going to be a negative 215. We're going to have a tax savings, so we're going to put that in as a positive 86. So negative 215 plus a positive 86 gives us a negative 129. My apologies for that. And after the savings loss, year 2 after taxes, we add back the depreciation of $608, and we get an incremental operating cash flow of $479. Let's move on to our year 3. So for year 3, I'm just going to copy down the numbers once again. It's $514, negative $121. Now our depreciation is a negative $361. So our savings before taxes is going to be $32 in year 3. Taxes rounded to the nearest dollar is 12.8. So our savings loss after taxes is going to be 19. We take the 19, add back the depreciation expense of $361, and we're going to get $380. Let's move on to year 4. We're just going to have to adjust year 6. So for year 4, 514, negative 121, negative 228. So we have 165 savings before taxes. 40% of 165 is 66. So we wind up having $99 of savings after taxes. Adding back the 228 depreciation, we'll have $327 in cash flows. Year 5, we're almost there. 514, negative 121, negative 228. So we have 165. I'm just copying the numbers, savings before taxes. We have 66 for our taxes. $99 is our savings after taxes. Add back our depreciation of 228. We're going to have $327 of incremental operating cash flows. Now, as I was looking at this, I realized that I'm actually a little bit wrong for year 6, because we're told that the new machine would only have 5 years of useful life. So we're not going to use this machine in year 6, so we're not going to get any cash savings, so we're going to change the year 6 cash savings to 0. We have no more additional expenses, but we do get to depreciate it. So we get a $95 tax deduction, $38 tax savings, but we actually don't have to pay that $95 tax deduction, so I actually get $38 of cash flows. So for year 6, it's 0 savings because we're not going to use it anymore, 0 maintenance cost, $95 of depreciation means that we get a $95 tax deduction. So we have a negative $95. Our taxes then would be a positive $38. So we would lose $57. Adding back the 95 means that we would save $38, which is the taxes, by having that 6th year of depreciation.